this is Matt from InvestiQuant. Today is Tuesday, January 26, 2021, and tomorrow is the FOMC announcement. So today what I figured we would look at is what has happened historically the day before the FOMC announcement. So let me go ahead and set this up and discover that's something that can easily be tested with just a few clicks here in the Discover platform. I'm going to select all four instruments. We're going to be using an intraday setup that gets long at the open of regular trading hours. The exit is going to be the close of regular trading hours, which is 4:15 p.m. Eastern Time. Now, currently, we're trading around yesterday's close. I don't know if we're going to end up being up or down for today, so I'm going to leave that information out. That is something that you can come back to as we get closer to the open and we know which way it's going to be opening. I'll be honest with you, though, it doesn't make a huge difference in this instance. The up gaps tend to be a little stronger than the down gaps, but there's not a huge difference between up and down gaps, and that's something you can easily test on your own here in the opening filters. So I'm going to skip over that for now, and then I'm going to go into the market events. This is where we can find all of the higher tiered market events that take place on a weekly basis, things like the FOMC announcement. We also have the day before and day after these events. So I'm going to go into this day before market event, and I'm going to find the day before the FOMC announcement. That is right here. It's also available there on the Active Today section, which makes it a little bit easier. Just go over there and click that. But I've got that added to the test. Next, I'm going to go into the indicators, put us in a similar market environment. We are trading right up at all-time highs. So I'm going to click above the 10 and above the 200-day simple moving average. That's going to put us in a bullish environment. And then I'm going to click View Results. And here we go. These are the results of going long at the open of regular trading hours, 9:30 a.m., exiting at the close, 4:15 p.m. Eastern Time, when it is the day before the FOMC announcement, and you're in a bullish environment, which I've defined as above a 10 and 200-day simple moving average. You can see from the equity curves, this day has typically moved to the upside. If we take a look at the stats, you can see S&P 74 samples here, the NASDAQ 68 samples, the Dow 75 samples, the Russell 63 samples, so very similar sample sizes across all four instruments. And the win rates, 62% for the S&P, have closed above the opening print that day. For the NASDAQ, 62% as well have closed above the opening print. The Dow is the strongest of the group, coming in at 68% of the 75 samples have closed above the opening print. And then the Russell, 59% of the 63 samples have closed above the opening print on this day. So all of these are around that 60 or just a little bit better percent win rate mark here, historically speaking. And if we look at the average win, average loss, they're fairly similar in size for the S&P. The average loss is bigger in the NASDAQ. They're similar in size for the Dow, and the average win is bigger in the Russell. But if we look at this as a group, and again, this is not using an opening filter, this is simply a seasonality-based study when in a bullish environment, this pattern has leaned to the long side. So you may want to dig into that opening filter as we get closer to the open. We know exactly where we're going to be. We're currently up just a little bit here, but we're close enough that I don't know if we're going to be opening up or down at the open, but that is something that you can dig into in the opening filters if you want to add up or down gap, or we could be opening above the prior day high or opening within range here. So there's a couple different things that you can add to that if you want to dig in more, but hopefully you found that helpful. Good luck, and we will see you next time.